we here in America, we're left to fend for ourselves. Now we can't live beyond our means. If we want to consume, we got to produce. If we want to borrow, well, then we got to save. We can't rely on the world's production and the world's savings. So this is a game changer. It's going to be an eye-opener. It's going to be a major realignment of global purchasing power, global living standards, and people need to react in advance. You need to prepare yourself for this coming dollar crisis, this coming sovereign debt crisis. Gold at $5,000 an ounce, or now $5,100 and change. It's telling you this is the canary in the economic coal mine. We're coming to a currency crisis. Gold is giving you an early warning that that's coming, and a sovereign debt crisis. So you want to load up, want to buy your gold, want to buy your silver, and again, get into these mining stocks. They were up today, but not nearly as much as they should. In fact, when gold and silver sold off, gold mining stocks, which were all strong on the day, all went negative. Some of them were down 4 or 5%. Crazy. And then when the gold and silver came back and made new highs, many of the gold stocks still ended in the negative. The GDX still ended up positive, just under 2%, and the GDXJ just under 3%. But these should have been much bigger moves. And I think there will be much bigger move. The Wall Street is still in complete denial regarding what is going on in gold and silver. They have no idea why prices have moved up. They expect that the prices are going to come down. They're wrong, just like they've been wrong the entire rally. And that's why they're not buying these gold stocks. And of course, if they really understood the warning that gold was sounding, they would be dumping bonds, they would be dumping their tech stocks, and they would be pouring their own money into gold and silver, into these mining stocks. They're not doing that yet. They will when they eventually figure it out, but they're still clueless. So while they are, you need to act.
According to Peter Schiff, gold surged past $5,100 and silver jumped nearly 8% in a single day. Yet Wall Street is still ignoring precious metals completely. He warns a dollar and sovereign debt crisis is coming, making gold the ultimate hedge. The mining stocks are massively undervalued and the opportunity won't last. Thanks for watching. Give a thumbs up and subscribe to Find Metals for the latest insights.
The Dow hit 50,000. Now, it's not even at 50,000 anymore. It's like 49,200. But he keeps talking about how amazing it is that the Dow hit 50,000, and it only took a year from when he started as president. He says, nobody believed this could happen in a year. People thought it would take 4 years, and I did it in one. The Dow is up 12%. 12% since he was sworn in. I mean, okay, 12%. I mean, that's something, but it's not a miracle. It's a lot less than the increase in the Dow the first year Biden was president. So does that mean Biden was a great president? Did we have a hot economy under Biden? Because the Dow did a lot better during Biden's first year than it did during Trump's. And in fact, since Trump's been elected, just about every single stock market in the world has done way better than the Dow. I mean, double, triple. I mean, it's not even close. The U.S. has been one of the worst performing stock markets in the world since Trump took office. So if you're going to measure how hot an economy is by its stock market, how do we have the hottest economy in the world when we have the coldest stock market in the world? Clearly we don't. But look at the other economic data that came out today. Worst that you could get, because the data on the economy was much weaker than expected, and the data on inflation was much stronger, the opposite of what you would want. So we got the GDP numbers, and this is for a Q4 2025, so last quarter. And everybody, all the people on the right are claiming that we've got this great booming economy because we have all this GDP growth. They keep talking about 5% GDP growth. It ain't even close to that. Now, yes, last quarter, we got 4.4%. And if you remember, I said, I don't believe these numbers. It's a one-off thing. Just wait until we get some more data. Well, the consensus was for a slowdown in Q4 to 2.8%. We got 1.4. 1.4, that's it. That is half of what was expected. But think about the slowdown. 3 full percentage points, quarter over quarter. The economy went from 4.4% growth rate to 1.4 in 1 quarter. So if the economy was hot, it's cooling off super fast right now. Look at the PCE, the Personal Consumption Expenditure Index. This is supposedly the Fed's favorite way to measure inflation. Right? Now, it was supposed to rise by 0.3 in December. It rose at 0.4. And not only did it rise more than expected, but the increase was double the increase from November, 0.2. Now, remember, if you annualize 0.4, assuming that we had the PCE going up 0.4 every month, like it did in December, that's 5% inflation. 5%, the Fed's target is 2, and now we're annualizing at 5. Now, I know it's just 1 month, but maybe it's 1 month that means something. Maybe this is going to be repeated. The Fed is talking about cutting rates. Now, I know we got the minutes of the FOMC minutes earlier in the week. I never commented on my last podcast. I forgot to talk about the minutes, so I'll address them here. But in the minutes, there's basically 3 camps. You've got really the doves, they're all doves, right? It's just a degree. But you got the camp that wants to cut rates, the camp that kind of wants to leave rates where they are for a while because they're not really sure. And then you have the camp that thinks that maybe we have to raise rates. They're not sure. They're not saying that we should raise rates, but they're saying that we need to leave open the possibility that we might have to, right? The other two camps don't even think rate hikes should be discussed as a possibility. And then you have a third that think we should at least discuss the possibility that we might have to raise rates. The reality is they need to raise rates. That's obvious. Inflation is much too high, and it's going to go higher and higher the longer they refrain from raising rates. And in fact, talking about rate cuts on its own is fueling this fire. And the Fed is really forced to start printing even more money. That is exactly what's going to happen. And Trump, again today, reiterated his false claim that the world has been ripping us off, that they've been screwing us over, and that they need to be punished. What exactly have they been doing? They have been supplying America with goods that we can't produce, that we don't have the factories and the infrastructure and the supply chains. We can't build these goods ourselves. And if it wasn't for the rest of the world, we wouldn't have them. So the world supplies us with stuff that we can't produce at low prices. So our lives are improved because the world is ripping us off. What does the world get? All the people who are ripping us off, what do they get out of the deal? Well, we print up money and give it to them. Cost us nothing, created out of thin air, and the world just takes our IOUs. So we import their stuff, and they import our inflation. We export inflation, we import goods. If the world stops ripping us off, what's going to happen? Well, we're not going to get the goods anymore. We're going to be stuck with the inflation. So we're going to have a country with empty shelves and sky-high prices. And lots of people are going to be unemployed because if there's nothing to buy because we can't afford anything and nothing is here, then all the FedEx jobs and the UPS jobs, those are our biggest employers. All they do is move around the stuff that we import. Well, if we can't import anything anymore, well, we don't need all these delivery trucks. The other big employers are Walmart and Amazon. Well, what do people buy at Walmart and Amazon? All these things that we got imported. All the things, we're being ripped off. And because we're being ripped off, there's all kinds of stuff that we could buy at Amazon and Walmart. Well, when the world stops ripping us off, well, there's nothing left for us to buy. And so if Walmart and Amazon, if they're not selling stuff anymore, they don't need all these workers. So not only do we have sky-high prices, but we have soaring unemployment. That's what happens when the world stops ripping us off. But what happens to the world? The world's going to have an economic boom. The world gets to keep all their stuff. All those consumer goods that they were shipping to America, they get to keep those goods. They get to enjoy those goods. They get to consume those goods. Better for them, right? We miss out, but now they get the fruits of their labor. And what happens to their savings that they were loaning to us? They were buying our treasury bonds, our mortgage-backed securities. Well, now they have all the savings still. They can invest that money locally. They can invest in funding more capital investment, factories. They have the money themselves. They have more capital. They have more consumer goods. They have a higher standard of living. They have stronger economic growth. The world benefits when they stop ripping us off because they're not really ripping us off. We're ripping them off. We are a burden that the world has borne. If you're still holding Bitcoin, do yourself a favor and sell it this weekend. You're lucky that it hasn't already, dropped through the floor. I don't know what's taking it so long. Look at a chart. Zoom out. All these crypto guys are always telling me to zoom out. Well, zoom out. It's ugly. Yes, there was a big rise, but it's crashing now. Look at what it looks like on a chart. And you tell me that that's not going to keep falling. Look, if Bitcoin breaks 50,000, which seems like a high probability event to me, you look at that chart. There's nothing that's going to stop it from going to 20,000. So, why ride it down to 20,000? If you have to, you could buy it back down there. I wouldn't, but get out now. Get into some gold and silver. We make it easy at Schiff Gold with BitPay. You can easily sell your Bitcoin and get some gold or silver. And we're not going to stop at 20,000. Maybe around 20,000, maybe there'll be a bounce. Maybe it'll go back up to 30,000. Everybody be excited. Hell, we're going to the moon. Then the next thing you know, we're going to be 10,000. And every time Bitcoin makes a new high, they say the same thing, right? The volatility is a thing of the past. You don't have to worry about the big drops anymore. It's been de-risked now. It's less risky to buy it now because, all the institutions are in, the government is in, so you don't have to worry about, big 50, 60, 70, 80% drops. Those were in the past, when it was a new asset, but now it's matured, it's broadened out, it's got more adoption. So, it's not going to drop like that. And then when it has a big drop, 50, 60, 70%, they go back and say, well, that's Bitcoin. That's how it is. Volatility is a feature, not a bug. This is what's so great about Bitcoin is that it can collapse at any moment. You laugh. They talk about the fact that Bitcoin crashes a lot, and that's what makes it so great, the fact that it crashes and you lose most of your money. No, that's not what makes it great. And you know what? Just because something crashes 4 or 5, 6 times in the past and comes back doesn't mean that the next time it crashes, it's guaranteed to come back. It may just keep crashing and never come back. And of course, that is what is going to happen. And people have to be asking themselves, with all of this good news, with a Bitcoin president and a Bitcoin cabinet and a Bitcoin strategic reserve and all this favorable legislation, with all these Bitcoin treasury companies, MicroStrategy, a strategy, and all of those copycat companies, with all of the big Wall Street banks having crypto Bitcoin ETFs, right? You couldn't have asked for more good news for Bitcoin. With all of this, and Bitcoin is down 50%. What does that tell you? If you've got all the good news you can possibly have, and the market is cut in half anyway, it's over.